Okay, this video is long overdue and extremely necessary. Some people aren't going to like to hear what I'm about to say, and I'm sure there'll be loads of people sitting there completely in denial, thinking like, oh yeah, what he's saying is actually true, that is absolutely correct, but hey, I'm different. So I hope after this video, you'll take some time to have a proper assessment of yourself, take a good hard look at yourself and really consider if the things that I'm saying apply to you or not. And what we're about to talk about really isn't anything new. But with the latest generation of traders and investors who are active online and talking to each other all the time, this sort of age-old wisdom in investing and in the markets has somehow been lost or forgotten somewhere. It's like people just left it behind. And there are some things based on this that really grind my gears and get me angry. So let's get into it. So the first point is to discuss bull market investment gurus and professionals. It's so surprising to me just how many people have fallen into this category or fall for this category of investors. Look guys, let's be real for a minute. Stocks have been in a bull market since 2009. I think it's the second longest bull market of all time or something like that. So what this means is that pretty much anyone could have made money in stocks at that time by just taking a buy and hold strategy on a portfolio of stocks or just investing in an index tracker. In that period of time, you would have made money. So this means that for the last 8 years, as long as you weren't a complete idiot with your stock investment and actually diversified across the board rather than just piling in on one individual equity that you believed in, then the chances are that you would have made money. And we're talking a triple-digit percentage return since the start of the bull run until the time of me filming this video. Now, of course, there were some relatively smaller corrections along the way, but as long as you held throughout those periods and you didn't sell or anything like that, you'd still be up overall right now. And let's face it, the psychologist Daniel Kahneman, who won a Nobel Prize, proved that we all suffer from loss aversion, meaning that when our investments are down, we're more likely to want to hold on to them until they're up again. So it's not even like you had to be a genius to hold on to those stocks during those periods when there was a downturn. You just had to be following your gut instinct of not wanting to ever crystallize a loss. Now, with all of that in mind, it brings me on to what I see as a big problem. Delusion. This is what happened in the build up to the financial crisis. A lot of people suddenly assumed that they were an investment genius because they were enjoying stock picking success in the bull market. They were the next Warren Buffett. However, as soon as the shit hit the fan and we entered the bear market, they soon realized that they weren't so gifted at stock picking after all. Not as good as they once thought they were. The bear market separated the genuinely good investors from what Philip Tetlock would refer to as the chimps just throwing darts at the dartboard to make their decisions. Now, to be perfectly honest with you, I don't really mind if you get delusional with your own investments. That's really up to you. You know, we're all adults here, we make our own decisions, and it's not like it's going to harm anyone, except obviously maybe yourself in the long run. However, I do feel like it's my job and my duty to try and help protect you from your own complacency. Because I've seen this happen before time and time again when people get too complacent and it leads to real problems. Like for example in 2011, when there was that market correction in August and the US credit rating got downgraded, there were so many investors in wealth management sitting with 2-year structured products. Now, these are products which are meant to make them money as long as the stock index is above XYZ level by a certain date. And it's capital protected, so a certain percentage of their capital is protected. And they were told that the market was guaranteed not to be down at that point in time since we were in a bull market. But then of course Black Monday happened and they weren't able to cash in anything on a 2-year investment. They held a 2-year investment that expired that month and they couldn't cash it in. The return obviously wasn't as guaranteed as they were told. People had got complacent. They lost money. However, the thing that really gets on my nerves is when people use this performance during a bull market to show other people how great they are at investing in order to try and sell their services to them. Now, come on. I mean, if they're trading, that's one thing because they're using the short-term fluctuations, which means that they're inevitably going to be riding the waves of bull and bear movements. And still, hey, most people aren't even great at that either, but that's another argument altogether. But when we're talking about a long-term buy and hold strategy on investments, and they're out there claiming that they're some sort of fantastic stock picker, Well, I just put them in exactly the same category as all the other self-proclaimed investment geniuses that lost the very shirt off their back when reality finally hit. So in essence, if someone has only been investing in stocks and they've only been investing since after 2009 and they only ever use a buy and hold strategy, and yet there they are saying how great they are at it, fuck them. Just holding an index tracker would have got triple-digit returns. They're not special. I mean, disclaimer, they might be, but they can't claim that now, not unless they truly are far outperforming the market consistently year after year, but most of them aren't. They're just in line with the market, broadly speaking. Oh, so you want to teach everyone how you made money consistently for 3 years in a bloody bull market? Do me a favour. And this brings me on to the second important point, and I think this one is really relevant right now in many markets. Bull markets get people complacent. It makes people believe it's never going to end. The gravy train's just going to keep on going. However, bull markets do end, and in fact, when there's euphoria with investors, they don't just fizzle out to an end, they end with a great big pop. I mean, let's have a look at this chart here. This is the traditional diagram of an investment bubble. Similar characteristics happen in the markets time and time again. If you've been watching our History of Financial Markets series, we actually have videos coming up next in that series about the tulip crisis, which is actually the earliest documented market bubble, and also the dot-com crisis, which I think is particularly relevant to this day and age now. So, keep an eye out for those, they'll be out in the next few weeks. I'd recommend watching that whole history series because this is why history is so important to us, as the same things, or at least similar things, seem to happen again and again. And we can really learn the lessons from the past in order to not become the dumb money next time around. You know, I think it's important that we don't lose the value in age-old investing wisdom. Even if sometimes it's easy for us to start thinking we're smarter than the old timers and that we've got our fingers more on the pulse, the chances are we still do have a lot to learn. And by the way, slight disclaimer, I'm not saying stocks are in a bubble. I do think they're due a correction soon, but I wouldn't call it a bubble. However, there are definitely similar signs to a mania phase, and I think that some people are just getting far too complacent. I think some people need a reality check because everyone seems to be an expert until the shit really hits the fan. So if you and everyone around you is making money from investing and no one is ever losing, of course, enjoy it while you can. Just like Chuck Prince, the former head of Citigroup, once said about the credit markets, as long as the music's playing, you've got to get up and dance, and we're still dancing. But guess what? The music does stop eventually, and if you're the one left dancing and you're a shitty dancer, you're going to be in for a bit of a shock. Thanks for watching, and please take care.